Friday, August 21st. I suppose every day in the markets, the idea is to try to figure out what's important and what's not. But this week, the supply of things is so rich. The Dow finished today down 530 points after an awful week. And the trick is figuring out what. As a general rule, try not to pay attention to stocks. Sometimes they're a signal of something, much more often than not. There is one signal embedded in the stock market's movement. For months, bad economic news, and the stock market has gone up. And it has done so on the hope that the bad economic news means the Fed's not going to lift off. Good news for stocks. This week, that pattern reversed itself with a vengeance. We've got lousy news. Not here, certainly not locally, but not in the United States. It's all overseas, but it's so tough that it's caused stock markets everywhere to roll over and transcend the Fed altogether. The Fed has moved into a state of almost irrelevance. It might go a quarter in September just to get it over with. It might defer in December and do it, but it doesn't matter anymore. There's much more important stuff underway, which began 10 days ago with the Chinese devaluation and more poor data out of China, and now more devaluations from emerging nations all around China and more bad data from them in what appears to be a downward spiral of sorts. Downward spirals happen all the time. We go through economic corrections all the time. Sometimes they are very nearly global in nature. We went through one in 97 and 98 that we thought was very dangerous and turned out not to be. All kinds of things self-correct over time. What's dangerous in this one is related to the very broad scale, this time it's different, of the last 25 years. In the last 25 years, global trade has grown faster than global GDP. Everybody is everybody else's customer. If China has rolled over even to just a lower rate of growth, and it drives everybody crazy that we don't have good China data. As I wrote in the copy nearby, when it comes to economic data, China is the Saturday Night Live liar, which keeps everybody on edge about what's really happening. But the first casualty were the emerging nations who sold commodities to China, especially raw materials. Their whole supply chain predicated on stronger growth than is coming from China. So as China slows the emergings. As the emergings slow, they buy less from China. As China slows, it buys less from Europe and from the United States, and basically everybody is buying less from everybody else. We go through periods of that too. What's dangerous about this one is the world is up to its eyeballs in debt. A lot of the debt is cross-currency. If I devalue and I have to pay back in a stronger currency, I'm in trouble. And there's deflation in the wind everywhere, which is very tough on those who owe money. Those two pieces, debt and deflation, make the decline in world trade something that can run out of control. That's why the markets are down. Don't pay attention to the markets themselves, but the impetus behind them that is unusual. Now, all of that said, mortgage rates are in the process of crossing below 4. The housing market in the United States is in, I'm going to say, its strongest stage since the beginning of the Great Recession. It's anything but taking off or overheating or inflationary. But the U.S. economy, if it were not for the mess overseas, everywhere, the Fed would be tightening strongly, trying to cool us off. But the mess overseas, there's no reason for them to. There's nothing to worry about here, which is amazing. So hang on to that thought as you watch the news this weekend. Have a good weekend.